Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss a potential US-China trade war, support from the 200-day moving average in US stock indices, Trump's attack on Amazon, and the beginning of the US earnings season. But first, let's run down some of the top corporate results to watch this week. Card Factory and Interserve are reporting full-year earnings this Tuesday. ASOS reports half-year numbers, Tesco has full-year results out, and Delta Airlines reports first quarter earnings on Wednesday. Saga has full-year results, Mothercare and Dunelm give a sales update, while BlackRock and Rite Aid report quarterly earnings on Thursday. Then there's a big finish to the week with US big banks JP Morgan Chase, Citigroup and Wells Fargo all due to report first quarter earnings on Friday. Now moving on to the economic calendar, on Monday there is German trade balance, Tuesday sees US PPI, Wednesday there's China CPI, UK industrial production and US CPI. On Thursday it's Eurozone industrial production and the ECB will release its meeting minutes. Then on Friday, we have China trade balance, German inflation and Eurozone trade balance. So Jasper, I've been away for a few weeks. I come back and we're still talking trade wars.
I know. I mean, well, it's not resolved. That's the problem. So every time there's a different bit of news, which pushes us closer or further away from a trade war, then the markets react. And the nature of the beast at the moment is that the volatility is high in markets. Obviously, even the actual figures being discussed at the moment, $50 billion on either side of the US and China, it's pretty small in the great scheme of things, but obviously markets are worried about where it could lead. Tit for tat, can suddenly ratchet up into hundreds of billions, which would be important for the world economy, and it could even spread to other nations. So that's what markets are fearful of. On Thursday last week, we had the markets reacting to Larry Kudlow, Trump's economic advisor, basically saying what we've been saying all along, that this is all really just a means to an end for an eventual trade negotiation. So you need a bit of game theory in this almost. It's, is Trump bluffing? Would he actually follow through with the tariffs? He kind of has to at this point. Then how does China react? How do they call the bluff? Or if they're going to go along with it, how many concessions do they need in trade for Trump not to carry through? These are the kind of questions we're answering at the moment. And so that's why I think, we're probably going to remain at a sort of, until this actually gets resolved at the end of this negotiating period they have, then I think it's the markets are going to remain choppy.
Yeah, okay. Now, give us your expertise about this 200-day moving average.
Yeah, well, it's been in the headlines a bit more than it normally is, a piece of technical analysis, but a couple of the US indices, the NASDAQ and the S&P 500, both nicely bounced off the 200-day moving average on the charts, and so a lot of people referring to this as a sort of level of support. I would just say that I think the way to use the moving average is a sort of a gauge on the environment that we're in. And so it doesn't necessarily by itself have to stop the price going down, but as it stands in these US indices especially, the 200-day moving average is sloping up. Mm-hmm. So generally speaking, we're in an uptrend, we're in a bullish market, and so naturally you're looking for buyers to step in at different levels in a bullish market, and in this case, the 200-day moving average itself acted as support. But the more important thing is guiding us what kind of market we're in. We're in a correction within a bull market.
Mm-hmm. Okay. And so Trump's tweet saw Amazon shares come unstuck last week. What are your thoughts on that?
Yeah, I mean, well, I think it's just interesting in the general context of what's happening in the technology shares. There seems to be an increased appetite at the moment, probably largely thanks to Facebook and their scandal, a more appetite for regulation of these tech stocks. Mm-hmm. And so their sort of unabated growth, if you like, unhindered by regulations that affect other industries, maybe that era is coming to a close. And so I think with Amazon specifically, I don't know the specifics of their deal with the United States Postal Service, but I think they have a pretty sweetheart deal. And my feeling is that probably Trump is going to try and follow through and intervene, obviously on the behalf of the the postal service. And so that will eat into their shipping margins, and it does call into question the viability of Amazon Prime, which has really been such a big source of their growth.
Yeah.
Offering the free shipping entices people to be more, regular shoppers with Amazon. If you can't offer that free shipping anymore, or if it becomes unviable and you start losing money on it, then that whole strategy starts to get unwound and affects other areas of Amazon that have been making money, like their cloud services, etc.
Okay, and finally, big banks reporting earnings this week.
Yes, and so, banks, just in terms of their share price performance, they've been coming a bit unstuck recently just because the belief that the Fed will start raising rates aggressively has come a bit unstuck, and so they don't have that the benefit of that higher interest rate margin. But what will probably be a differentiating factor this time around is obviously we've seen massive market volatility, not just in stocks, but bond markets as well, commodities too. So trading volume should be up at those international banks. That doesn't really affect the likes of Wells Fargo, but it should be a big factor for JP Morgan Chase. That should help their earnings in Q1. And so I think we're going to get a little bit of a boost there. And that will just be interesting for investors who are probably a little bit worried about how tech has been performing in Q1 and they're looking for alternatives. Financials are an area that are still kind of undervalued. Most of these banks are sort of trading less than their book value. So investors looking for an excuse to get in there, and maybe these earnings results and the up in trading volumes would be good enough reason.
Right, okay. Thanks, Jasper. And thank you all for watching. If you wish to see these videos as they're released, please follow LCG on social media.